Hi there, and thanks for tuning into Kalkine TV. I'm Rose Jacobs, and this is The Hot Performers, a show where we take a look at stocks and sectors that could be heating up. Today we have ASX-listed company Qantas under the spotlight. The price of Australia's largest airline's shares, Qantas Airways, plummeted today as the company announced its half-yearly results for financial year 2022 ended on 31st of December. The development took place. The impact of Delta lockdowns and the arrival of the Omicron strain of COVID-19 led to the Qantas Group's fourth straight half-yearly statutory loss. Still, some positive factors were speeding up the rehabilitation of the company's balance sheet. On that note, let's look at Qantas's first half results of financial year 22 and discern what worked and what didn't work for them. Let's take a look at the Qantas 2020 half-year results. The emergence of the pandemic affected the group quite strongly. The group's total flying was reduced to 18% of pre-COVID levels during the half due to widespread domestic lockdowns and continued international restrictions. Qantas reported underlying earnings before interest, taxes, depreciation and amortisation of 245 million Australian for the first half of financial year 22 due to depressed market conditions and ramp-up costs. This was Australian $331 million in the first half of the financial year 21. Its revenue losses increased over $22 billion since the start of the pandemic. Qantas had a net debt of $5.5 billion, putting it within the group's target range. On that note, let's look at the company's business updates. Looking at its domestic business update first, Qantas and its low-cost airline Jetstar announced 48 new domestic routes in the last 18 months, including 15 new domestic routes in the 6 months to December 31st of 2021. Domestic travel demand was substantially suppressed for most of the first half due to lockdowns, with the group only flying 42% of its pre-COVID capacity. While there was a positive demand increase in November and December, the regular summer high was below forecast due to Omicron-related uncertainties. Now let's look at Qantas International and freight. To assist the market transition, the group announced the conversion of 2 A330 passenger aircraft into freighters and the delivery of its third A321 freighter. Qantas International generated roughly $325 million in recurrent structural cost savings, with plans to extend this to more than $400 million by financial year 23, significantly assisting in the recovery process. Concern regarding the Omicron strain had a dampening impact on travel demand in December that intensified in January. Additionally, it was deepened by the unexpected delay to Western Australia's border opening. However, forward demand for both international and domestic services has improved during February for the company. It was further helped by Australia's full reopening to all visa holders and the announcement of a new date for Western Australia's borders to open. This positive momentum is expected to continue in coming months. Qantas expects to achieve a 68% domestic capacity of pre-COVID levels in the third quarter of financial year 22, which would increase to almost 100% in the fourth quarter. However, group's international capacity is expected to be 22% of pre-COVID levels in the third quarter, rising to 44% in the fourth. Qantas shares are trading at $5.14 currently. And lastly, Qantas stated that sustainability is a key priority for the group as it emerges from the pandemic. Significant work took place in the half on the pathway to reach net zero emissions by 2050. In a first for any Australian airline, Qantas purchased up to 30 million litres of sustainable aviation fuel over 3 years for flights departing Heathrow, London. In March, the group will announce more detail on its sustainability strategy, including an emissions reduction target for 2030. And that's all for now. We'll be back again with the exclusive Hot Performers stock tomorrow. Till then, keep watching Kalkine TV for the latest market updates and related insights. I'm Rose Jacobs. Thanks for joining me.